Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Today is interesting companies there which we'll get in KYC. But before that, I'll give you some hints. Try to guess it. Recently, it has been on news also. That important hint also I'll be giving you. It's a Hyderabad-based infra company, but it is making its inroads into pan-India player as well. Second hint I'll give you is a 1400 crore order win coming in and the company's market cap is just 3000 crores. So you see how important this order win is, and that is what has given me this interest on this company. This is the highest ever volumes have been recorded recently. Last week, the stock price movement has happened. That's what has caught my eye. And to give in more perspective, the DIs and FIIs have also been increasing stake in this company. It's a small cap company, but a lot of action is there. And that is why I want to get this company in KYC and give you the entire picture. Is there a new story brewing in this company? The company's name is Ramky Infra from Ramky Group from Hyderabad. This company is very interesting company. And let's look at why we are actually calling this company. There are a lot of reasons for it, and it has not been tracked by many analysts as well, and very little exposure, but nevertheless, FIs, DIs are increasing slightly their stake. A 1402 crore order win coming in from Maharashtra Industrial Township, and this might be more further orders might come in. That's what the street is expecting. The order book outlook and the status, that is something which we'll ask about Ramky Infra. Also, the third question would be how the inquiry is shaping up now, especially from the non-Hyderabad based work orders. Also, another reason why Ramky Infra is of interest for us is the focus on their operation and maintenance programs. These are generally large contracts, multi-year contracts, and that is where the company is actually focusing on. And by when will the promoter shares pledge they reduce as well? That's a bit of concern with a lot of investors have written to me. So we'll ask the management as well how things are progressing, and the revenue breakup between Hyderabad and non-Hyderabad regions. That's something which we'll watch out for. And also if there is a global exposure, we will get all our queries answered. And on the show is Sunil S Nair. He's the CEO at Ramky Infra, where Sunil will decode all of our queries which we are having for the company. But now let's move on to about the company, what we should know about the company. It's largely an infra-based player, but there are some layers to it. So one by one, I'll get you all the details about the company. It was incorporated in 1994, 30 years plus. The company is old and it's a flagship company of Ramky Groups. If you are from Hyderabad, our viewers are listening, you know this group. It's present all across the city as well. Also, the company deals with urban solutions, building, wastewater and industrial solutions. So सिर्फ एक काम नहीं है कंपनी का, 3-4 काम है, and that's what we are going to decode here. They have completed roughly 450 projects across the sectors over the last 30 odd years. That's pretty interesting track record, and 185 projects in the water sector and 50 coming in the industrial sector as well. So more or less infra-related company we have talked about, but order book is very much important. As of December 2025, consolidated basis, a 9,000 crore order book is there. So order book to market cap ratio agar dekhe, so we can see the order book is 3 times compared to 1 unit of the market cap. The debt, that's around 163 odd crore rupees in the consolidated basis. Largely, this is very less compared to what the order book is and the financials are looking like. And this is the big win. I was talking about 1402 crore order win coming in from the Maharashtra Industrial Town. And let's get more details about this order win. This order win is for Dighi Port Industrial Area project. That's what the company has talked about. But let's get into the timeline of it. The project is expected to be completed within 930 days from the appointment date. And I was talking about the operation and maintenance part as well. That is a period of 4 years from the important dates which the company has given. This is the key order in focus which you should know. Also, apart from this, why the interest has come in this company, and largely nobody tracks it, and that's why I'm here to help you out to make an informed decision. Market cap just 3,000 crore and the order win is of 1402 crore. That's the first query. The second interest is DIs and FIs have slightly been increasing the stake in the company. I'll show you that in the shareholding pattern analysis which we'll do. And also the street is expecting more positive corporate announcement to start coming in as well. That is where the interest is lying, especially in the circles or the dealers are talking about. The promoter pledge, however, still remains a concern. but nevertheless the debt levels are on the lower side. And also one interesting thing, if you're tracking the technical charts, highest ever volumes are recorded recently in the company as well. So it becomes very much interesting to talk about this company and figure out whether we can create any alpha or not. Let's move on and talk about the ratings. In our KYC show, we have our basic ratings where we judge the company. And of course, the numbers are the most important: income statement, balance sheet, and cash flow. That's what you should be focusing on. But also, we'll see the return ratios. Kitna return ratios bana hai? ROC, that is the important parameter which we'll be tracking. Shareholding, last 3 years, how things have moved, promoter movement, anything, or FIs, DIs have been adding. That's one thing. Street cred, if you're a long-term investor, 5 साल में आपका कितना पैसा बना. Short-term investors, 1 महीने, 6 महीने, year to date, all of these details I'll get for you, and the valuations we'll check. In the company's history as well. We are not doing a peer-to-peer analysis here because they're having 4-5 segments to track, and outlook, especially on the company's infra segment, be it the company specific or the industry specific. So these are the rating parameters where we'll judge the company. But the first one is the income statement, and let's see how the numbers are panning out. Revenue top line, this seems a little bit of moderation coming in FY25. Remember, Q3 numbers are also there to look at. And largely we see the margins is always lumpy when you get a infra company to judge with. PAT has also reduced significantly from FY23. We see that lumpiness coming down to 210 crores in FY25. So a lot of mixed set of numbers are coming in. Let's get a little bit of more clarity in the Q3 numbers, how they are panning out. And this seems a bit decent, you could say. The top line growth coming in and a slight bumpiness in the margins. Profit is also definitely there. So net, it's a neutral rating for an infra company when we see these numbers coming in. Also, let's talk about the balance sheet, how things are moving here. And balance sheet is something which I like for a company of this size, because the debt level is something which was a concern, but the total debt is just 163 odd crore rupees. That means they are managing the debt properly. But definitely the question remains is why the financing costs are high. It's evenly reserves are there, and the total equity setup is also looking strong. And largely the borrowings, that has come down from FY23. Look at the number, it's down to almost 570 crores. So definitely almost 60-70% of the debt has reduced, and the cash bank balance is at 160 odd crore rupees. So there is a good balance sheet management happening from the management. So it is a positive rating when it comes to the balance sheet. So we spoke about income statement, we spoke about balance sheet, but remember, for an infra company like Ramky Infra or any other infra company, cash flows are always lumpy. There are always issues happening, and this is not a major, reaction whenever I judge an infra company, and that is where the concern starts coming in. It's negative, the net cash flows here, and also this has reduced, compared to FY23. It seems like FY23 was a watershed year, but after that the lumpiness starts coming in. That's why the cash flow is not actually a good criteria to judge an infra company, but nevertheless it is very important, and I do not change those rating parameters in KYC. So it's a negative, so it's a thumbs down when it comes to the cash flow segment. But let's move on to the other segments. The return ratio, generally you demand or at least a 15% return ratios, ROC, for an infra company, and company has maintained that. In FY22 it was 19%, slight dip in 23, but then it is going up, it's up 21%, and it's maintaining that. So anything above that 15% mark, give or take, it's a good return ratios coming in from Ramky Infra. So I have given a thumbs up when it comes to the return ratios. But let's look at the shareholding, how things have come up, and promoters haven't largely sold anything. It is 70 odd percent, but a concern remains is this promoter shareholding pledge. That's the concern definitely there, and that we will try to address this. Largely it's not tracked by analysts or neither fund houses, so it becomes my duty to get you the entire picture. FIs, DIs, however, they have been slightly increasing their stake, though it's very minimal, so you cannot see. We have done a lot of rounding off, but net minor increase from FIs, DIs are definitely happening. So largely we'll say it's a neutral rating when it comes to the shareholding pattern. Also, moving on, apart from the shareholding pattern, let's talk about the other segments which would be very much important, and that is the street cred. Street cred, if you're a short term, medium term investors, क्या आपने पैसा बनाया? नहीं, नहीं, नहीं. All three cases, the last 1 year, money hasn't been made. But if you're holding the stock for a long term, if you're a long term investors, 5 years, It's a multi-bagger. 449% of returns have been coming in. So balancing things out, right now I'll give a neutral rating when it comes to the street cred. Now let's talk about the valuations, and valuations, something it's very different. What we have seen, peak numbers around 4-5 years ago, this has come in. It was 120 times its P ratio. But then I've taken a 10-year average to actually balance things out. It was 32 times when it comes to Ramky Infra, and the current numbers I'm talking about, it is at 16 times. From the 10-year average, it is still 50% down. That means there might be some kind of value definitely emerging, and because the volume was so high, that is where my interest lies. Is there a start of an up move here, technically speaking? Or are there important corporate developments building up for these small cap companies? This is important to track, and that's why I have given a thumbs up to the valuations. But let's talk about the outlook. Street is expecting more positive corporate announcements to come soon. That's what the chatter is all about. The second thing is the growth on the non-Hyderabad-based projects. That is where the eye focus is on, especially on the Maharashtra side. The management's positive commentary coming on the execution. This is what we had heard in the Q3 presentation which we had seen, and the long-term O&M contracts, that is where the bullishness lies, and maybe the management is executing towards that segment. So net, overall, this is the outlook picture looking like, and I'll give a strong thumbs up when it comes to Ramky Infra's outlook. But let's just gather all the ratings together so that it becomes very easy for you to digest the details about the company. Isko kitna rating humne diya? Income statement is largely neutral, balance sheet has been decent, and the debt level is very low. That's pretty much interesting for an infra company, but cash flows, of course, remains a concern. Return ratios on the higher side, 15% plus you can expect, and shareholding in street cred is largely neutral. Long-term investor, you have made money. If you're a short-term investor, the last 1 year or you haven't made much money, and of course, markets are also there where the overall correction has impacted small caps and mid caps. Valuations very cheap compared to its 10-year average, 50% down, and outlook is something where my focus is, especially if order announcements start coming in. So net, on the higher side, Ramky Infra is 5.5 out of 8 where we talk about the company. But apart from the company, we'll be talking to the management, and Sunil S Nair, he's the CEO at Ramky Infra. Sunil will talk about the entire positions of the company. He's a chemical engineer holding a CFA certification, and that's a very interesting take. Education is from INSEAD, and he has a strong exposure to Middle East and North Africa region, and the leadership roles he had in Utuco, Litwin, CAI, and Gulfar Engineering. So Sunil is a man of many hats, and joining in right now is Sunil. Good afternoon, Sunil. Always a pleasure to have you on our show. Sunil, first of all, this 1,402 crore order win coming in, especially from Maharashtra, your views on it, important takeaways on it, and what are the timelines we're looking at?
Good afternoon. Thanks for having me. I mean, this is a 1,400 crore EPC plus O&M. It's an integrated industrial park, which we are building it for, MITL. Largely, this is going to be completed over a period of 2.5 years. Design build job. Largely the scope involves civil infrastructure, which is including roads and bridges, electrical water transmission, sewage network, electrical substations and distribution network, and water treatment plants. So it's an interesting job where we are one of the pioneers in building these industrial parks. We operate India's one of the largest for the last 20 years. So there's a lot of lessons from them, and we have just started the execution, and we are kicking off the job.
All right, so this is the important developments coming in for your Mumbai order win. But going ahead, what's the current order book looking like, and what's the expectation in the next 2 to 3 years? If you could give us any kind of a number for the order book segment, and which segments actually the inquiries are coming, Sunil?
Well, I think with these job, our order book stands a little over 10,000 crores, close to 11,000 crores, which has come from various segments, the 3 segments that we operate in: water, wastewater, industrial parks, and the civils and buildings. So largely these are distributed across these segments, but we see a lot of these happenings on the industrial parks, which are design, build, build, own, operate in both the wastewater segment as well as the industrial park segment. So we expect we are lowest in one of the very special pharma park in Maharashtra, which is expected to come soon. So that will also come into our order backlog in the coming days. I mean, so we are quite bullish about the pipeline currently.
Okay, so management is definitely bullish on the pipeline. But Sunil, just to get into a little bit more details about how the order book is looking like, if you could just break it down into the sector-wise where you are seeing the highest inquiries or the client confidence coming in, because you are working in waste, water, roads, bridges, and urban infra. So which of these segments you are seeing a really high inquiries coming?
So there is quite a lot of interest. These are on HAM models, EPC models, and the long-term O&M contracts. Industrial parks, we have a solid inquiries across infrastructure, in Indian sectors. There's a big push from the central government on building up these parks. So then the third, obviously, on the building side, we largely support our development divisions, which are doing a 15 million square feet across India. So it's quite a balanced structure. If you look at it, everybody is contributing. Largely, industrial parks and wastewater would be our major focus.
Okay, so industrial parks, water waste segment is something where the entire focus would be coming in. But Sunil, is there any international exposure which the company is having right now?
As of now, our exposure in the Middle East market is close to null, but we are very actively pursuing quite a large wastewater projects in that region. Even we are lowest in one of the jobs there in the Middle East, but we are cautious. We are watching what is the evolving geopolitical situation in that market. But what we get from our client is that there are no delays on these projects. So we expect to grow some of the wastewater projects in that region.
There is water waste, that is something which we talked about. Desalinization is also something which a lot of infra companies are talking about. A lot of listed peers are also giving these services or these EPC services in the Middle East and the North Africa region. Are you looking to go in that segment also, the desalinization projects?
Obviously, this is one of the areas that we are looking at. I mean, we are looking at a number of desalination projects. Even in India, as you speak, we have just been awarded a small 100 crore project with the VOC of building a desalination plant and seawater intake and outfall. So, which is just kicked out with the execution last week. So, it's one area that we are looking at. But it depends on opportunity. We're extremely selective and disciplined in our bidding. So we have to be extremely careful which kind of a client, what kind of a structure, all of that are taken into consideration before we start bidding.
All right. Apart from that, the debt level seems very on the lower side, around 163 crores is something which I picked up from the Q3 numbers as well. What's the overall debt, short-term, long-term currently? If you could just give us a little bit of picture on that.
No, I think we have come out of the credit issues and we have cleaned up our balance sheets. Today, we are a clean company. The current 163 crores, which is we have monetized on one of our long-term annuity contracts. So our debt structure is very, very low compared to all the peers. So I mean, that's some of the focuses that we have a discipline on the financial side. We are quite conscious about what we are building and what kind of cash flows. We've gone through these ups and downs of this infra industry, so we are quite well aware of what's going on in the market, and our shareholders are also very keen to see that going forward we have a clean balance sheet.
All right, clean balance sheet, yes, definitely. A little bit of lumpiness in the cash flows, that's of course your business model. But Sunil, I need to understand a little bit more on the margin profile. There seems to be a little bit of volatility in the margins. going ahead, what kind of a margin you are targeting? The projects which you are actually bidding for, are they on the higher side of the margins, or is it the legacy projects? Because on a consolidated basis also we need to see the margins, and if yes, if you are moving towards the higher margin side, any kind of ballpark figure, I suppose it's around 16-17% right now.
Sure. I think if you look at it, our business model is a bit different from us typical infra companies in this market. We have OPEX and CAPEX. I mean, CAPEX is where a lot of these execution risk comes in, whereas these OPEX is that generates free cash flows and a larger, better margins. So we have a very well balanced portfolio. So that gives us a double digit in terms of our PAT. So going forward, we see that this is margin continue to remain very stable, and then there are new jobs which are coming in, or we got those jobs at a decent, very reasonable rate. So we hope that the margins remains very stable going
So we
forward.
can expect something between 17 to 20% as a margin.
Yes, it is expected.
Okay, that's the range coming in. But Sunil, apart from that, the question is, this new industries which you're talking about, is there any other new industry which you like to venture in, or the existing announcements of the industries which are already functioning in, that's enough?
No, as a company, obviously we are looking at opportunities. There is one sector that we are looking at is the carbon capture. The other sector we're looking at mining. So these are opportunities that are very specialized. And also we're willing to look at, there are water projects within the oil and gas industries, within the petrochemicals, where there is a requirement of, treatment of, water. So there are a few other areas where we are looking at. I think there are a couple of jobs that we have already started bidding on these lines. So we expect to see new orders coming in these new sectors.
All right, and apart from that, there are at times concerns also from investors who write to me, and a little bit of concern is definitely there, is the pledge part of the promoters. Is there any timeline to reduce that going ahead?
Sure, we are in the last phase of that restructuring of our old legacy term sheet with various banks. I'll be hopeful that in the coming quarter that we'll be coming out of coming out of the old legacy, all the credit issues.
All right. Apart from this, Sunil, another interesting case is the overall revenue breakup. The Hyderabad industry is something which we have seen a lot. A lot of folks from Hyderabad also write to us about your company. And one query has come in is that, are we looking at any other value creation activity from Ramky Group? Because Ramky Infra is your signature project which is listed. Are we looking at any kind of other listings coming in from your group? Is there any value unlocking move left?
The other group companies are currently privately held, but I wouldn't be in a position to comment on it. But then there are a lot of activities on the and the waste management sector. They are a pretty large company. There are investments from VC and development companies. So I do not have any information on their listings as of today.
Okay. But you have given us a very 360-degree view. Thanks a lot, Sunil, for the company and the industry as a whole. It's always a pleasure to talk with you and give our audience the entire picture for Ramky Infra. Thank you very much, Sunil.
Thank you very much.
So that's the management of Ramky Infra giving us the entire picture, and the most important conversation is they might get more orders going ahead. So keep an eye on the stock. Volumes are high, and also by next quarter, the share pledge of that legacy contracts will be over as well. Company just 3,000 crore market cap. Do keep a look on this. That's all, folks, for KYC today. Stay tuned to NDTV Profit.